Oh, I'm sorry about that. I'm sorry. Um, Susie just came over to tell me that she wasn't able to hear me. There was one more button I needed to push. That was one more. Can you hear me now? Can somebody just give me, if one person can hear me, then I know. Susie, can you hear me now? On a little bit of a delay. I know our members have a live Zoom. YouTube is telling us that we are live, we are up. And so I'm just hoping that somebody will send me a little chat function and say, yep, we can hear you, Don. Maybe I can try to open up my own mic. YouTube is telling us that, yep, I can hear myself. Yep. Okay. Awesome. Thank you. Thank you. Yep. Okay. Thank you, Susie. Um, so at the risk of repeating myself, because I'm not sure, I don't think I was coming through. I just wanted to um, remind everybody about who we are before we get started here. And I just want to, and I'm not saying this, when you hear this, you might hear other people say this and you might hear, and good to see you, Scott, as well. You may interpret it just as a statement of a disclaimer, right? It is a disclaimer, but it's an important disclaimer, and I don't want to race through it because I want to make sure that you understand who we are not, and also, you know, the the responsibility of all this. So let me just state, maybe the obvious, maybe not. I'm not a broker. I'm not a financial advisor. We don't make specific recommendations to buy or sell any security. We don't. I'm not soliciting funds to manage. I'm not. I'm not a money manager. And I'm also not making any claims at all. I'm not saying that if you subscribe to us, that you are automatically going to make a ton of money and do better than us and get an opportunity to quit your job and go buy a motorhome and tour the country. I can't say that. Have we had people do that? Yes. 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 Um, do much better than us. And to that extent, it doesn't take away from us. It's not a zero-sum game there. The markets are so deep, so wide. Their success doesn't hurt us. But why I emphasize this, what we really are, we're a mentoring site, a place where folks that want to learn how we go about trading the markets so that you can maybe adapt some of that for your benefit and um, and learn to trade mechanically, robotically, whereby you can hopefully get rid of the emotions of greed and fear and trading um, purely on the money. That's really what we're about. And and I can't emphasize that enough. I started, so I'm kind of repeating myself because you guys, the mic wasn't on. We will get, I'll just describe to you, and we get a ton of emails, and I can't always respond to them because some of them, to give you a flavor for it, and I kind of put this in, and I don't think it's you guys here that come here and listen. We have seven people. Thank you, including Susan. And others may, pass by. Our website gets hit about 6 or 7 thousand times a month, but only a very small fraction will reach out to us. And I think what it is, a lot of times we'll get these nasty grams that, will say, you're a scammer, you know, um, it's a scam. I'm not really sure what they're saying. Sometimes they might be saying the market's a scam. And you know what? I probably agree. It is kind of a rigged game. We try to teach, and what we try to do is stay on the the right side of the market. I mean, if it's rigged, let's stay on the side that's rigged by tracking money flow. So I think probably 50% of the people out there probably think the whole thing is a scam and don't want to have anything to do with it. And that's okay. I don't want to reach any of those people. And then we might have another, I don't know, maybe 47, 48% of people might say, yeah, I'm skeptical and everything, but you know what? I don't have the time. I don't have the interest, and I don't want to work at this. I don't want to do it. I don't want to be bothered. And that's okay too. That really is, because we spend a tremendous amount of time doing this, and our members do too. And so there may be, a very, very small percentage that have a passion to want to do this. When you hear me speak of robot, I'm going to explain and try to put this all in a bit of a context. When you hear us talk about robot trading, we're talking about robot assisted trading, though. So I just want to make sure that everyone understands that when we say that we don't make any specific recommendations and we don't make any claims. We had the gentleman, and he actually said that. He repeated, he says, what the hell are you doing? Well, where the hell would I want to follow you? Why the hell would I want to listen to you? And we've actually gotten more than one of those. And that's good. And he kind of moves along. The Why I say it's good is that that's what everyone else is doing, right? All the other monthly fees that you might pay is somebody handing you a fish, and maybe it works, maybe it doesn't. You don't really learn anything, and that's what everything is out there. That's what a lot of that stuff is. That isn't us. We're going to want to take the time, especially during the Q school, 3+ weeks, and teach you what we know, for better or for worse, for you to really give you an opportunity to say, yeah, no, I don't want to do this. I don't want to go this direction with it. I don't like it. I don't want to do it. Before you make a time commitment, a money commitment, not just to us, but even into the market. Maybe you wind up just saying, now, fortunately, and we're pretty confident on this, that we're very good at what we're doing, that isn't the case. The vast majority of folks, I can count on less than one hand, folks that didn't decide to go on to become an annual member after spending 3+ weeks. In fact, when we do that, we a lot of times the 3 weeks is actually ending early. If folks are saying, Don, I really appreciate it and everything, but I'm ready to go. I'm ready. I want to get underway. So I just wanted to remind everybody, who we are. And that this word robot assisted. I was going to show a picture of a skill saw that you might buy at Lowe's. They got some pretty sophisticated hardware down there. Just because you can buy a real sophisticated skill saw at Lowe's and you can go in there and buy some wood, it doesn't mean that you're going to be able to come home after watching a 1 hour video and build yourself a staircase. Probably not, right? Probably not. You have to have acquired carpentry skills to build a staircase. Might be able to do a few things. The Intuitive Surgical that sells a robot assisted surgical device. They use the word assisted. I've sat in that device. It's like a cockpit to an airplane. It's a fantastic tool, multi-million-dollar tool. It's a surgical tool. Now, I didn't do surgery on a person, but I had the chance to operate it, and it's really phenomenal. But even they talk about when those billboards go up on your highways that says, the hospital has robot surgery. It's really a marketing term. The company actually says robot assisted surgery, right? Need to be a surgeon. So if you go to our website, we talk about robot assisted trading. Robot assisted trading. So if anyone thinks that, oh, I can just lease because you can't buy, if I can just lease one or I can lease them all, I'm going to automatically, be able to build that staircase. I'm automatically going to be able to do open heart surgery in the market, so to speak. That would be the wrong message. You have to learn, right? You have to learn. Now, there's another, you know, um, There's a number of statements that come out of Wall Street that are, a lot of it's BS, and some of it's true, and some of it is very self-serving. One of the statements they say is that you cannot time the market. And to a certain extent, that's true, right? To another extent, it isn't. So first thing is what you got to stop and think about. When they say that you can't time the market, we got to first define time. Time. Is it, and I don't want to sound like Harris. You ever hear some of that crap she's talking? Those word salads. But when you're trading time charts, you do need to select the time, the interval. 5 minute, an hour, a daily, a weekly, a monthly. So you've got to define the interval. Whatever the interval is, there will be a high of that interval. So if it's a day, let's say it's an hourly chart and you're looking at a daily, it's going to have a daily high and a daily low. The prospect of the chance that you're going to pick the very, very high, the very, very low from one day to the next, to the next, to the next is slim and none. So to that extent, you cannot time the market perfectly every day. There might be a couple of days that you do, right? Which can be very, very rewarding, and maybe even some dailies, but not day in and day out. I'm not a bowler, but I've seen people bowl, right? I've seen some really good bowling, the 10 pen. Now, some of those guys can bowl, a perfect game, a 300. Um, they've worked very hard at it, right? But even they don't throw or bowl a perfect game every single time. Are you going to watch? Maybe you're not even going to watch anything, right? You're just going to, you're retired now, or you're about to retire, and you're going to go out and you're going to buy yourself a nice big shiny bowling ball and the bowling shoes and the glove and the powder, right? And you're going to go down to the bowling alley, and maybe you don't even bother watching a video, or maybe you just watch one video. What do you think the likelihood is that you're going to bowl a perfect game? Probably not likely, right? Nope. You might get a few gutter balls. You might break your toe. Um, so and you can watch all the videos you want on the bowling, but you might want to find yourself a mentor, somebody that can help you, where you got to stand, your posture, your release. I'm sure and I'm not a bowler, right? I just, it looks pretty neat when they do it really, really well. It looks pretty damn easy, right? Well, you get up there, stand there, and just throw the ball down, get a bunch of strikes. Um, there's an art to it, right? So you may, if you have a passion for bowling, maybe you're going to find yourself a mentor, and then you're going to start to practice. And when you bowl a strike, are you going to rush online? And hoot and holler, hey, I got a strike, and run outside, and I got a strike, and tell everybody, no, you're bowling. I mean, you gotta do it frame after frame, right? I think that's what they call it, a frame. And then you got to do it, day in and day out. Um, you may never, you may never in your life bowl a perfect game. But does that mean that can't become a damn good bowler? You probably could. You probably could. And the same thing is true with golf, right? The likelihood that you're going to just go out and get the clubs and get everything, get all the equipment, and then just watch an hour of golf, and then go to the golf club and just shoot a 72. It's not likely, but you can try. I just hope you're not in front of me because I want to get through and out of there, especially when it's hot in the summertime. I don't want to have to wait on you. But people do that, right? The golf course is full of that. Um, Trading, you're close to retirement, you're thinking of retiring, and You send the brokerage a bunch of money. You watch a video or two about Rinkos, you watch a video or two about candles, and then you stop buying and selling, selling and buying. Yeah. Okay. And you get a couple of strikes. But does that mean that you're a Davy day trader? That you're a professional trader, right? He anoints himself. He's a professional trader. Just buy the dip, it's nonsense, right? So I just remind everybody this is an acquired skill set, and that our tools are here to help and assist you to become the best trader that you can become, and to get over your emotions of greed and fear, and to live the life that you want to live. And it can be a beautiful life, but you will have to put in a lot of time, and you will have to put in some risk capital. And what's brutal about this game, unlike maybe golf or bowling or any of the others, is that when you get it wrong, everyone's concerned. Not everyone isn't, how much does stock market caddy cost? I think we're I think the value is tremendous, but ask yourself, and think about it. How much, how much is it going to cost you to go into these markets without an education and get some trades wrong? It can literally put you on your ass. There'd be many, many multiples of what you would spend with us. And I'm even here now before we get started, because I don't think I can deliver this message, too much. In the very first day or two of Q School, all we talk about is mitigating risk and what the risks are and how we go about mitigating risk. Because what I want to try to impart to you, what is critical, is that you don't have any negative outliers. None. You cannot have any negative outliers in this game. And I see the tweet. I saw a tweet yesterday, and it's like, oh my goodness, I don't know if it's serious or not, but there was somebody I saw it come across, and not directed at me, but just out there. And the person said, I'm 40 years old, and I want to know if I should sell my house and put all the profits into Bitcoin. Oh, Jesus Christ. You know, one, um, there's so much in that. Forget about Bitcoin, forget about crypto. It's just that somebody would be prepared to do something like that is incredibly reckless. But it may be true, and it may be out of out of desperation. So you don't want to be desperate, and you don't want to rush, and you want to take your time. But I think we provide a really, really good education in the period that we do, and then we try to support. And if you take it to heart and approach it the way that you would approach your job or anything else, and get serious about it, I think you can do really, really well. Let's take a look at the markets. And any questions, just let me know. I'm happy to try to answer. This is the S&P, and you saw this chart earlier. Everything that you're seeing on this chart is done automatically or robotically, right? The brick value here is $850 a brick. This is on a mini contract. If you're using a micro, it would be just 85. This wording up here is being printed by the machine. It will change. Under accumulation is being printed by the machine. These swing points up here are being printed by the machine. These little sell and buy dots that you see here are being printed by the machine. The short signals and buy signals are also it's a robot, and it's actually activated, and we actually may see some trades go in. Even though you see the buy and the short, we're only taking the shorts right now. We haven't been many. We can do that. We can have that kind of control. And that's the other part of this whole idea of robotic trading is you can intervene. You can, make a mechanical adjustment. right? Which is what we're doing. So I got some space over here. I just want to take a moment. We've done this before at the risk of repeating, but not everyone has seen and heard this. So we want to try to on a Friday just provide a little education. Let me just type out a couple of things if you don't mind. And again, any questions, and I'll show you anything you want to see. But there are only 4 ways to trade. There's only 4. Do you know what they are? 4 ways to trade. Number 1, you can trend follow long, TFL. You can trend follow short. You can counter trend long, and you can counter trend short. That's it. You can only do those 4 things. No matter what chart you're using, no matter what you're looking at, even swing machine, those are the 4 trades. And it's critically important to understand that. It's also critically important to understand what type of trade you are about to put on or you are putting on. And if you can't identify it, you're bowling with a mask on. You know, you got something over, you're bowling blindly. You're playing golf, with goggles on, or you can't see. You can't see what you need to see. Also, too, what's critically important here is, let's see if I can line this up here, is why you need to be able to identify. Let me put it this way. I do it this way. Why you need to be able to identify the type of trade that you're in or you're about to put in is that the trading characteristics of each of these is different. So let me try to do it this way. What are the trading characteristics of trend following? You make the most money. You also, they are infrequent. They don't happen a lot. And the win-loss is usually 30 to 50%. And in fact, I can widen this out here because it applies to either side of the ball. Let's see if I can do this. There we go. So whether you're trend following long or trend following short, the expectation you should have is that, yes, whatever interval you're on, that is the trade that will pay you, of the 4, will pay you the most amount of money. It'll pay you the most for the least amount of money you're putting at risk and in the least amount of of effort. That's true. But what you also have to understand and appreciate and expect is that they're infrequent. On any interval, they don't happen a lot. So you have to know that. Because if you're looking for them every minute of every day, and you speak fast, act fast, walk fast, work fast, golf fast, bowl fast, you're fast, you may struggle trying to get on trends because they're not that fast. They're infrequent. The other not seductive, but troubling one is the win-loss ratio. If you are on a trend, excuse me, I got a mask on. Kidding. If you think about this, but if you are getting on the trend, the win-loss ratio is usually 30 to 50%. It might get a little above 50, 51, and we can and certainly do very, very well. Very, very well. If you're hitting, 50%. We can still even make money at 25, below 30, 25%. You can still make money. But you have to really, really think about what we're saying there and think about it. If you put on 10 trades as a retail trader, that means 5 to 7 of your bowling balls are going to go in the gutter. You're going to have 5 to 7 gutter balls. The person who doesn't expect that, is probably, is going to struggle. You're going to have, you're going to miss the shot. You're going to miss the green, or, you want whatever analogy you want to use. So you have to be prepared psychologically that, I'm going to lose if I put on 10 trades. And if I'm going after the trend, and you're going after the trend, you understand how to identify a trend. We haven't even talked about that. And I'll show you how to identify it on any chart. If you don't know how to do that, and all you want to do is win, 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 you could be hurting yourself. And that's why I'm taking the time to explain this to. Excuse me, I gotta sneeze here. Oh, allergy here. Now on the counter trend side of things, counter trending, it's okay to do. And I like to do counter trending. I probably like to do it too much and I have to do less of it, but it doesn't pay a lot. They just pay a little bit, a little bit. Also, what's very seductive about counter trends is that they're frequent. They're very frequent. They happen a lot. The other thing about counter trends is they're seductive. The win-loss ratio is 70 to 80%. They need to be. You need to be, if you are a counter trend trader, you need to be winning 70 to 80% of the time. Now, the retail trader, if they don't know what they don't know, they must say, well, that's what I want to do because I want to win 70 to 80% of the time. I want to be right 70 to 80% of the time because it feels good. It feels good. And that's okay, as long as you know, but also too, I haven't done this in a while, but it feels good to pee in bed, right? Until it doesn't, until you wake up. So, you have to know, you can put on a trade, a counter trend trade, and, make $300 and make you $300. But, if you didn't know you were on the trend and you put on a counter and you made you $300, maybe you're happy with that and you'd be happy. But if you then sit back and watch Swing Machine make $3,000, then it doesn't feel so good because you can also have loss opportunity, right? Opportunity. But it's up to, but this is where you just need to be made, not you personally, I don't want to be talking at anyone, but you've got to think through what we're saying and you've got to think through what you want to do. And we will do both, right? We will do both. There's no question about it. It depends, earlier in the week, I may be more interested in going after the trends. Once we achieve our financial objectives for the week or exceed them, then I might drop down to doing some counter trends, right? The other part of it is though, if you're trying to be right, you're trying to feel good, you're trying to win, and you keep doing that, then you'll never get on the trend because you cut them off. You cut them off too early, and that's a problem. Sorry, I just had to take a drink. Um, the other part is if you don't really know what type of trade you're putting on and you're in the trades and you're putting them on and you're losing, you've lost 5 to 7 times out of 10. Like, man, this don't work. Man, I'm losing. Man, I'm down like $1,500 or whatever. I'm down $1,000. And you're not really confident, you know? You got all those gutter balls. You don't know yet. You haven't experienced yet. And then you put on a trade. And you're like, all right, and you're all emotional. All right, I got it. I finally got the trend. There it is. All right. Whew. All right, I made my money back. I'm going to take it off. And you take it off. So you went down 1,000 on the 5 to 7 that you lost. And then you finally get on the trend and you're on the trend. And as soon as you get your money back, you come out and you break even. Or maybe you get really nervous and you decide to lose, wow, I could just lose 200. So I'll take it off now. So I'll just lose 200. I could have been down 1,000, honey. And you lose, and you're down for the day. And of course, that trend goes on to make like $5,000. And you're like, oh, shit, I'm not in it. Huh, maybe next time. And now you're gambling. And we don't gamble. But that's what happens, right? Those are the emotions of trading money. And if you're trading the money, the fear and the greed, you will lose. And they know that. And they're manipulating the shit out of you, just like they do with everything else. I'm not. I'm not telling, I am not. Trust me on this. I'm not suggesting you should do this. I mean, our membership, when you stop and think about it, we're trying to do everything we can to give you who we are, what we're about, and every opportunity to say, yeah, no, I don't want to do this. I was talking to Darian yesterday. He's here now. And we talked about our monthly membership. We don't like, it's not, join for a year, Darian, join. No, it's join for a month. It's $100. You learn some stuff, you get some trades in, you start to learn. I'm totally fine with that. That's the way I would want to be treated. So just know that this is critically important. Now, we'll just kind of block this off. If there are any questions, oops, I don't want black. Any questions on this? And now it seems, and I get it, it seems pretty, Jesus, the Zoom, they changed their tools. They really could improve. We've been using Zoom before Zoom was Zoom too, by the way, but what's tricky about this is I make this analogy. Maybe I don't like doing it during hurricane season, but we're in Florida. I'm in Florida. And many of you may or may not know that every hurricane that hits Florida starts with some little butterfly in the Sahara Desert. Did you know that? He bends over and he farts and he kicks up a couple of pebbles of sand and it gathers up and becomes a thunderstorm. And then it goes off the Cape Verdes and builds and gets heat from the ocean and starts spinning. And it takes a few weeks. And the son of a bitch comes across and wreaks havoc with us here in Florida. Every single hurricane that hits Florida, not all of them do, but every single hurricane, and it's certainly every one that hits Florida, starts with a butterfly fart. Every single one. However, there are times when that little butterfly farts and it just becomes a little thunderstorm and it dissipates. Sometimes that little butterfly just farts, kicks up a couple of pebbles of sand, and it's just a butterfly fart. It doesn't do anything. Trend trading is a hurricane on whatever interval. That's the hurricane. And it can be daily, weekly, hourly, minutes. We've had hourly trades, hourly hurricanes last 2 weeks, tens of thousands of dollars. We just don't know how long they're going to last. No more than we know when the hurricanes come in here. But the distinction that I want to make here is counter trend trading. If trends are hurricanes, what are counter trends? They are butterfly farts. That's what they are. And maybe you want to do that, I mean, but, and the thing of it is, some of the folks that you might be following, like the hockey captain up there, and they got a service and they charge you for this and they charge you for that and they charge you for this. And, they talk about, that the new Wall Street and they're the new Wall Street. And, it's just a bunch of unemployed stockbrokers. I'm sorry if you're one of them, I hope not. And they're just repackaging the same old shit. And they talk about, if you subscribe to this service, their alert service, they got an 84 or 90% win rate. Well, I can tell you right now, if that's the case, they're not getting on any trends. But I don't even know the interval. Do you even know the interval? Do they even tell you? They don't even tell you. And so you may not even want, but see, to the uninitiated or to the person who doesn't know what they don't know, they're like, wow, if that thing wins 84% of the time or 85% of the time, then I'm guaranteed to make money, honey. We got to subscribe to that. And then they don't make any money. And the reason for that is that you can have 9 trades in a row that make $1,000. But if you don't have any trading skill and you don't understand what it is you're doing, and they're not going to bother to teach you, they just want your subscription. That 10th trade, you might lose 20 grand. So you won 90% of the time, but you don't make any money. You lose. So we're taking the time to describe this. What does it look like? Because I'm also going to show you here how confusing. Well, this can be very confusing to look at, but it really isn't. I'll strip it down in a moment. But let me, and we're only got 15 to 20 minutes. So I know you probably wanted to look at trades and want to look at the market, but I think it's much more valuable to do this for you. But, and we will redo this, during the queue over and over and over again. But when you are trend trading, it looks like this. Oops, I'm trying to get a market here. Bear with me. Where the devil is it? There it is. So when you are going up, going up, going up, right? Pretty easy. That's a trend. Higher lows, higher lows, higher lows. We enter here. We set a stop here. We get on. We add again and add again. There's the idea. Buy the dip, buy the dip, buy the dip. You buy the highs, actually. And that's why when the market is making new highs, everybody is a genius. Everybody is, and that's when I get most concerned, because you could have bought the dip, you could have bought the highs, you could have just buy, right? Just buy, because if it always goes up and it's going to hit new highs, everybody's going to make money until everybody doesn't. And then you get this. So that would be a trend follow along. And then you got something that looks like this. Oops, I'm sorry. How did I do that? We go, kind of looks like that. Down we go. This is a downtrend. We enter here short, we set a stop here. We enter here short, we set a stop here. We enter short here, and we go here. Now, if you're following Davey Day Trader or Ryan Dietrich, or everything is in an uptrend. Don't even bother yourself with the downtrend, because the market never goes down. Sure, okay, fine. That's, maybe that's your base case. maybe for the last 10 years, that's the case. But again, from 1966 to 1981, for 16 to 20 years, the market went sideways, right? It didn't. And that could be starting today. It may have started last week. I mean, I don't, it depends, where you're at. But this would be a trend fall short. That's what you would want to be doing there. But there's a problem here. The markets only trend on any interval about 30, I'm still in red, about 30% of the time they trend. Not that much. The rest of the time, they do this. They go sideways. Kind of like what they've been doing here the last few days. They go, I should do it up top. Let me back it up here. Do it up here. They kind of go like this. Sideways. And everybody wants to get on the trend. But there is no trend. So you got to know, and we have systems to identify that, how to trade that. You're trying to get it when and the part of it is the market goes sideways about 70% of the time. The little bastards, right? So when you're in a sideways market, you want to be counter trending and you want to have the skills and the tools and machinery to do that. And then when we start the trend, we want to know, are we going up? Are we breaking out? Are we breaking down? And then we want to be able to have the tools and the discipline and the patience and the confidence to stay on the trend. So in it's tricky, because also what is also true is when we're going down, maybe I should do it with this one here, because this is what's happening here. You'll have a situation, this is where people get vertigo. And it's important to have machinery. I can get vertigo, but the machinery can tell me, because again, this is populating. Our programs are programmed to interpret this. But let's say we pull back, Don. Well, that's a dip, isn't it, Don? Yeah, when it's not, yeah, it is, until it isn't. And then, boom, we break down. The important thing is we took out that swing. So what happens is every trend does in fact start with a counter trend. Back to the hurricane. Every hurricane starts with a butterfly fart, but not every butterfly fart is going to be the new trend. So if you happen to fund your brokerage and you have no idea, and you're all excited and you got the TV up and you got your newspaper and the IBD and CNBC on and you got Twitter and you listen to that. All right. I got to get on the trend, and the daily's doing this, and you don't even have the right resolution, right? You're trading intraday, but you're looking at daily charts, or you're trying to trade intraday and you're looking at hourly charts. They're too big. You can't see what you need to see. Maybe you should be using price charts. I didn't know. What's the difference between a price chart and a time chart? Well, they vary. It could be point and figure, it could be Renko, custom Renko, Kagi, but we will do them all. But and you put on a trade, and it just so happens that it's a trend. And you were looking at this, you were looking at that, and it pays you huge. Pays you $5,000, big single trade. Like, great. And then you don't fully appreciate it, and you go back in and you get the same, what appears to be to you, to the same setup. But what you had was a counter trend out of, the trend into a trend. So now you look at the same setup and you got a counter trend, and you put on the trade and you lose. And you do it again and you lose. You do it again, you lose, and you give back the $5,000. Like, what kind of crap is that? I'm doing the same thing that I did the other day, honey. I don't understand. Well, you don't know what you don't know. And it's a lot like golf too, right? When I'm in Florida, I hit my 7-iron about 100. Don't laugh. We got a professional golfer in our midst, and he laughs when I say this, but I hit it about 150, if I'm lucky, about 155 yards. That's my 7-iron. My 5-iron, again, don't laugh, is about 170, 175 yards. But when Susan and I take a vacation, it's been a while because we don't like to leave our Goldens anymore. If you have Goldens, I guess kind of like having kids. So we like to go up to Georgia, North Georgia, or the Carolinas or something. But if we go up into the mountains of, let's say, Colorado, be extreme, and I have a four caddy. By the way, this tool up here is called a four caddy, SMC four caddy. This is Trend Caddy. This is four caddy. And the four caddy says, "Hey, Don, you know, you're from Tampa. How far do you hit your 5-iron? 155 yards. How far are we? 170. Oh, I better hit my 5-iron. No, no, the four caddy says, no, Don, the air is very thin here. We're at an elevation of, 8,000 feet or something. You could probably still hit your 7-iron. Oh, okay. I didn't know that. Now, he's, educating me as I go. He's not hitting the shot. I still got to hit the shot. I still got to execute. I want to play the game. I don't want some, you know, you don't want me playing the game for you. I don't think. If you do, you don't want to subscribe to us. You want to subscribe to the guy in Connecticut or somebody else. But if you want to learn how to play the game and you want the Trend Caddy, you want the four caddy, you want Swing Machine, then you know, that's what we're about. So I hope, I didn't realize it was going to take me that long, but this is critically important to understand. And if you are doing any kind of trading at all, I don't care if it's option. And by the way, if you are putting on option trades based on a chart, you're going to lose. Sorry, but you are. You may not think so, but I got to tell you, and I'm familiar with Tom Sosnoff, and I don't like his politics, but I like him as a person, and he's very, very good, and he is one of the founders of Thinkorswim, and he's still got a little something he does. I don't know, an entertainment thing he runs or whatever. He's been very successful. We subscribe to not to him, but to his teachings a little bit, and we're compatible. I'll put it that way. I have never been through any of his programs, but I understand what he's doing. I think he works extremely hard. I think what they do is extremely hard, but day in and day out, I don't want to work that hard. Where was I going to go? Oh, I lost my train of thought. Where was I? Well, I mean, the fact that he founded Thinkorswim, but he doesn't use a chart at all. He thinks it's bullshit. And for options, it might be. It actually might be because options are all math. But we do trade options. And we have programs that will decipher the math for us. But then what we do that he doesn't, we then will take those trades teed up to us from one of our tools called the Option Club Selector, and then look at it on a price chart. So we'll combine the two. So we do like doing that. But he doesn't at all. And that's okay. All right. So you got this here. So we're over here. So kind of like what's going on with this. Maybe I should do this. I want to clean this up. I want to take off some of the writing. So let me copy this chart. Bear with me. Copy window, and I'm going to paste over it. Try to paste over it. I think there it is. All right, so because I just want to show you something. How does this work out? Now, if you want to do this manually, day in and day out, I get it. It's fun. But if you're trading for a living day in and day out, drawing this out and doing it mechanically, what we call mechanically over and over again, it gets really, really boring. It really does. So it's a lot more fun, to have the machine do it. I can take the dogs for a walk. All right, let me turn off a few things. Oh shoot. Let's see here. I thought I was going to be able to do this. Maybe I still can. Bear with me. I got to pull this over for a minute. Okay. Oh, and I just lost my screening. Dang it. Bear with me. All right. I'm going to turn off a few things. I'm going to bring this into view so that you can see it real time. Okay, so I think I'm going to do this right. I hope so. Okay. It's kind of messy over here. I see what I did. Let me do this here. Sorry. Oh, I see. So you're not going to be able to see it. Um, okay, so I'm going to erase some of that. And let me erase it all, actually. I'm going to erase all this. So we got a nice clean chart, all that writing and stuff that I was doing. So you can always go back and you want to take a picture of it or think it through. All right, so now we got a nice clean chart of the S&P. And this is a price chart. And we don't have the time to fully explain how this works, how the trend category works, and the four category, but trust me, it's doing it. But let me just bring your eye to the trends. And we can do it this way. You know, let's a couple of things. Here are the swing points, right? The swing we call the ball marker. Notice one here, higher, higher, headed up, higher lows. So we're headed up. When we start doing this, you might want to start doing the buying. Notice up here, these swings here, lower, lower. We may actually make another one. They start stepping down. Now, let's just take this most recent move because we were short up here for not just because of reasons of the chart, but because of other tools that we're using. But let me draw out the downtrend, which you can see. You can see this, right? See the legging? But then, but bagger, but then, we get into, this sort of thing, right? And then boom, boom, right? Looks something like that. And then we start, but bagger, then we start stepping, and I'm going to stay with the same red. We start stepping up, and I'm confused. I don't know. Are we going up? Are we going down? And you get vertigo. And I get it. But this is where you have to define, what it is you're doing and understand the chart that you're using and what's actually happening. But the other piece to this is, I drew this trend, and if I was to zero out those bricks, I can come here, and now you're going to be able to see it maybe more clearly. Customize. I can come here and I can turn those bricks off. And now we can begin to say, oh, I see. I turned the bricks down, like, we're stepping down. Maybe that would have been a good place to enter, stop, and come down, right? Oh, that would be a beauty, right? But these are two huge trends. These were big trades, big trades. And now we're doing this, right? We're going, it's kind of trending up, but I don't understand. We're trending up, but are we going up for up or? So what we can also do is you can do the trends, within trends, right? So this may be, and this is where you have to learn how to decide what is going to be your trading resolution. How close to the vest are you going to be trading? Now, if we're trading futures, we're going to be trading it intraday. We're going to be trading it really, really close and carving them up. We may only be hitting, 9 irons and sand wedges and, 7 or 8 irons. We're not taking really, necessarily really big shots. But if we're trading options for weeks or months, let me show you, I'll just bring this back into view. We're not trading with surgical precision. We're just trying to hit the side of the bar. And let me put the bricks back up. And it doesn't matter if it's Renko or time. Let me bring this back up. And just to change the color, I'm going to now draw something else. I'm going to do it with cyan, and I'm going to make it fatter. But what if we were doing something like this? We come from here down, we kind of bottomed out there, and then we kind of topped out, and then down. And where are we now? What does that look like to you? Are we going up or are we going down? On the bigger, Now, time will tell, but what I see here is I see a pivot and a lower high than here. And we extended down. And what I see here now, there's a ton of money to be made in these little ones here, right? There's a ton of money to be made. But what I'm thinking is that we're probably going to make some sort of other pivot here and a lower high, and we're probably going to break that way down. And Ryan Dietrich in CNBC and Davey Day Trader are going to get everybody barbecued because everything to them is, an uptrend, as it was here. You can see the uptrend. This was a low, and then this was, you need me? Yep. And then a higher low. And yes, this is where you want to be buying, but the market has changed. We'll see. What would have to happen? We would have to have a structure where this comes back, holds, and starts to go. We don't have it. We're right here in decision time. And that's when the stock pimps at the bank go to work. That's their job. Get on CNBC and start telling the sheep, not you. You trust me, you guys are not the sheep because you're here listening to this. The sheep don't want to listen to any of this shit. They don't want to do it. They just don't want to be bothered. They got a boutique broker, and they send their money to him. And, if you're so lucky, play your cards right, maybe they'll tell you who it is. Trends. All right. I'm going to back off of this. Let me do a couple of things here. I'm going to erase this, and then we couple this kind of knowledge with some other automated tools that could be sitting. These tools could be sitting on your desktop. Let me bring this back, and then I'm going to show you some of the tools, and you're like, okay, well, but I want to know what's happening with the market. Can I get on this thing? Where the devil is it? There it is. I got to pull it over. Let me close this down here if I can. Bear with me. I'm going to bring it back. I promise. I hope so. Yep. All right. So here it comes. And we'll expand that. All right. And I can even get rid of that thing here. I don't know why that's there, but so in our view, and this is a view that our members get to see, this thing is doing its trading. And it will if there's a trade to be had. It hasn't had any, but we can couple this with other things, right? And what you begin to see, and so we have other tools. As an example, so this tool here, this is our Nicholas timing tool, and it did go short all four markets back on August 1st, but the VIX went short last night, and that's a warning. So it's telling us we've hit an inflection point. This condition will not be here within 72 hours. One of two things is going to happen. The markets are all going to go long, and this happened last night. So within 72 hours, today is Friday, Monday, Tuesday. Within 72 hours, the markets are all going to trigger long here. Doesn't mean that it's necessarily going to be a winning trade, but we got a high probabilities that it will be if it does. Or This is just the faint on the VIX, and the VIX will, within 72 hours, go long, and the short will resume. Now, this short, when it did first go on August 1st, our high watermark was $74,000. All right. So our members probably took some profits and or hedged, but the trade is still in place. But this necklace is neither long nor short right now in this condition. The likelihood is, the probability is that it's going to fail. Not because of what I just drew out on the chart, but because of this. The VIX. The trend on the VIX is risk off. 9-day, 30-day, 90-day, 6-month. The VIX futures, it's risk off. So if you want to buy the dip because you listen to Ryan Dietrich or CNBC and because it looks like a dip to you, or Davey Day Trader, you go right ahead. But I'm not buying it, nor is Susan. On a position basis, and what I mean by a position basis, I mean overnight with options. Now, we may have a few that are expressed long, for a bounce that we're hedging, but our core position is definitely short. Don't you trade, right? Because it could change within a couple of days, and I will change. So remember where we opened. I'm not making any recommendation. I'm giving you some insight about how we make our decisions. This tool, where's my should be some writing in here that I don't see it. I don't know why. Where is that little devil? Huh. I don't see it. But the skew, oh no, it's not here. But skew is also trending up, and you can see now. Look at this on a daily. Now this is the S&P. Just this alone, just look at this. You tell me. Are we going up? Or are we going down? Here was the high. Down we come. Up, down. What are we doing? We're countering. We may come up here, but what do we got to do? We've got to come down, hold, and then break out. So we got another leg to go down, and we'll be in there and watching it. And if we break out, we'll cover and go long. If not, we come down and, we think we're headed down. But again, if you're trying to do this, if you're trying to trade as a business and trade frequently, and doing it longhand visually, it just gets real. It does get tedious. But if you got machinery to do it, it's beautiful. I mean, and you won't get vertigo. Skew, yield curve, not negative. Now this has been for a year and a half. Don, that's been that's since November 9 of 2022. Well, it takes that long for the recession, for the media to recognize it, right? I mean, you know what we got for media. We got, this legacy media. They make you stupid on every subject. Notice the yields are going down. This is 30-year treasury yield, 4.2. It's down 57 basis points. Why are the yields going down? Because money's running into bonds to hide. That's why. That's not good. If you're bullish, you don't want to see yields going down. You want to see yields going up because people want to borrow and grow and buy shit. Not just individuals, but companies. They're not. They're hiding their money. They're hiding the salami. And they're going to leave everybody a shit mess who have their retirement accounts in here. But that's what that tells us, at least on a daily basis. And then we have other tools, the sentiment gauge. And, this is a very quick, everyone monthly gets to see that here's the VIX still at 60, very, very high. We're not panic selling, and the market ES is still below its mean right here at about 30, so it's very proportional. We think we got to make another run at this. We think, the VIX is going to head this way and the markets are going to be in trouble. Where else, let me just show you. Here are our trades for today. Here are some trades. This is the SMC trade generator. Here are trades for today. There have been 16. They're profitable in 15 of the 16. This one is 9%. That's crazy. How can it be? Yeah, it is. That don't seem right. but it is. Hmm. That is, oh, it gapped, gapped down. So you can't always get these. We can't, you know, they don't all gap. And then Akamai, that also was a gap up. So with stocks, you get subject to gaps. Apple was a buy today, though. Yeah, it looks pretty good. It's what type of move is this? This is a counter move, right? Down, up, down. We're just countering. It's just a counter move. It will fail somewhere's up in here, and then we'll go back down. Here is the options club selector if you're trading options, and this is where we get them. So we'll come in here and anything, it's recommending a call on McKesson. It's interpreting the implied vol, all the math, and then we will take McKesson and we will plug it into Swing Machine and we will plug it into a chart and take a look and see and calculate the risk reward. We will also teach you this during the Q. And then you want to see what's going on now. This is the daily, so we're running over. So I'm going to kind of wrap up here and happy to answer any question. But let me show you. Okay, that's where we started. And then here is Swing Machine. So in the time we were talking, I said, damn it. But the whole idea is not to be giving out trades, but had you, let's look at just the 1 minute. So you want to be a 1 minute trader. And you just want a 1 minute trader. But this Swing Machine is doing 1 minute trends. So let me show you in the time that we've been on. Let me get this. I'll block it off. So the 1 minute ES went long at 1234. If a member took that with a mini, he's up 650 bucks. If he did it with a micro, he's up 65. If he did it with 10 minis, he's up 6,500. The 1 minute here, 1 minute trend, 1 minute trend. 1233, he's up 11. That's Abby. She's having a good time. One happy dog, and he has the Dow on a 1 minute. But, we can draw all this out. You need to be instructed. This isn't a red light, green light. You need to practice, 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 and we need to review during the Q school, uptrends, downtrends, what type of trade are you putting on? Are you going in the direction of the trend or are you going against it? We can put this on a chart. We can see how many winners we've had in the last 2 weeks, what the market is giving us, with the average up, average down, drawdowns, run-ups, and it'll be different and it'll be based on the volatility. But we only go back a couple of weeks so that we're capturing the current flavor of the market. But if you watch all this and just say, hey, bagger, how much is that bought? I'm not even going to talk with you. I'm not selling the bot. I'm not leasing it to you. I'm not even going to let you in as an annual, because the person, when they do that, they just telling me, and they haven't even looked at the website. They don't know what they don't know, and they're not even interested in learning. They just want what doesn't exist. And that is some sort of holy grail where they don't have to learn, they don't have to put any money at risk, and they can just get something automatic and it's just going to print them money. That isn't happening. But for those that commit the time, the capital, can you take these tools and do better than us? Yes. Yes. Because we have folks that have. David from Germany might be listening. He called in. David's been with us for several years now. He's the gentleman that I referred to where he had a profit factor of 1 week of 80. He's probably done it a number of times. And if you know what profit factor is, you know what that means. He called into the Zoom and wanted us to know that last week was his best week ever. I'm sure it was. He was a very happy boy. We're happy for him. We're over our time. I'm going to wait a couple of minutes. And if you got any other questions, let me know. Invite you to visit the site. unlimited monthlies, limited annuals, limited, and we're ready to get started when you are. Provided if it's going to be the Q school and the annual, we have to have a conversation. We have to schedule it because we have folks in them now. We can only do so many. It's not a classroom, at least not now. And if there's any other questions, we talk about, trade resolution like a football game. You can do this as an investor. If you are, you shouldn't even be paying attention to the intraday. You shouldn't be paying attention to the daily or the monthly, or I'm sorry, the weekly. You're an investor, monthly, years. You're in the sky boxes with the hoi polloi. But if you are trading intraday with futures, you are on the field. You are playing the game, right? You are a defensive end. The play is coming at you. You need to make sure that that runner doesn't get outside you and run down the sidelines. You may not make the tackle, but you got to make sure you pinch him in so your teammates can tackle his ass. You don't have time to analyze anything. You must react. You must be trained. You've got to know what to do. Fortunately, here we can use technology. On a football field, you just got the little hairs on the back of your neck and your brawn. In an airplane, you use technology, right? You gotta. Why not? It makes it's meant to make it easier. We will end where we started. We can provide you the tools, just like Lowe's. You can have a full year of all the tools. We'll give you the education up front, but then you're going to have to apply them. Whether or not you can get to a place where you can build yourself a staircase or play a hell of a, round of golf or, become a really good bowler will be up to you. It's learn to trade your game, not mine, not Susan's, not anyone else's. All right, I'll wait a couple of minutes and then we gotta finish our business for the day. Wish everyone the best. Thank you. We want to update the gold is actually not GCQ. We weren't trading it here, so it's GC. Z is the current contract. GCZ 24. Same thing with oil. GCZ 24. I think oil is the same thing. So I'm sorry I didn't have that updated. All these are used. They will roll. They roll over, and we cover this in Q. And let's go get the oil. I think it's CLZ as well. No, it's CLU. It trades what we call the front month, CLU 24, CLU 24, CLU 24. And you want to be diversified. The other part is, you want to learn the trends, but again, we're going to hopefully impart to you to trade as a business. You need to be diversified in what you can do, not diversified in what you own, right? That's just repeating the mistake that Wall Street wants you to make. We want you diversified in what you can do, trading futures intraday, trading options, 35 to 45 days. And yes, investing. You can use these tools for investing. The approach is the same and it's all scalable. You can do it with micros. You can do it with as little money as possible. You can do it with as much money. It's all what we're doing is teaching you something that is scalable. And we're also giving you, the opportunity to say, no, I just don't want to do it. It's too, it's too much time. It's too much. I don't want to, there's plenty of people out there too. And I hear this, a lot of times from young people, like, do you play golf? Hell no. I don't have the time to go out there. That's an old man's game. They don't want to play. They want to sit home, air condition and play, war games on a computer or something, or Dungeons and Dragons, and eat Cheetos. I don't, any case, I wish everyone the best. Have fun. Okay, everyone, we wish you the best. And if the market rolls down, our members will see it. Market rolls up, our members will see it. Is it going to do that next week? Yes, it is. It's going to be up and down every week. Have fun. Have a great weekend. Thanks.